Hi guys, quick update here for YouTube. It's 1st of July 25. Hope everyone's doing great. If you want to know more, just come and join the group. Educational courses here, and it's free 1 month's access to the group if you buy the full version of the masterclass, and it's cheaper over 3 months, and you can pay via crypto. Message me through the Facebook page. Just go on to more, which is here, and then you can find, follow us here. You can also find some bundle offers there too. Now, I want to take a quick look at Coinbase. So with Coinbase, I would say it's safer to assume it's topped, because the reason that I'm saying that is that it's basically tagged the IPO price. So if that is one complete pattern, that could easily make its way to 100. And so the higher something goes, as we know, there's less and less reward up there. You know, I was looking at a run off the actual high, but I regard anything from 380 to this IPO day high as a bit of a mispricing. So to me, that's gone far enough now. There's very little reward left. And frankly, if all of that is done, that then sets up the big move back down again. And in which case, dynamic risk and reward. We speak about this every single video, every single day. The higher something goes, the closer and closer you're getting towards your target. There's very little to gain here. There's very little reward, and there's all the risk. Interestingly, slightly decorrelated from Bitcoin. It doesn't really change Bitcoin's fate. Bitcoin is still going much, much higher than its current price. But for Coinbase, specifically, I would say it's top. Now, we've been covering SPXL for a while. We obviously were buying down into here because we know how to read a chart. We said 190 from the lows. I see no reason why it can't get up there. Just like Coinbase, very little to be gained here. Ultimately, the target could be 210, but it is a leverage ETF, so we have to be careful. And we're saying 210 because of this trend line here. So you can just double click here, and then you can go into style and extend right line. Okay, so there are two ways to draw a trend line. One is just the way that I've done it. The second way is to bring a line, bring it all the way out, and then you go all the way back down again till you get the first touch, which is there. So either you connect the 2 points and extend, or you go all the way up, all the way down, and then the first touch, that is the trend line there. So 190, 210, that's been a very good trade. That's been a double. That's it, all over. After that, it could go to zero. No one cares about an asset once you've disposed of it. There's too many things going on to be giving a toss about an asset once you've disposed of it. Okay, Circle, we've got out of this. We were looking at a short and a cheeky little oversold bounce. Obviously, it's topped. It has left a poor high up there, but regardless, we were looking for higher, just in case it's a 1, 2, 3, 4, 5, but that's way too deep for a 4. Too much damage has been done. I think it's probably worth a tickle here. We were looking for a short much higher. The short never materialized. That's okay, nothing to worry about. We made money on the long, but that just can't be a 4. It can't be a 1, 2, 3, 4. Here, it was a different story, which means you're regarding all of that as an ABC, and thus we're making our way all the way back down to the value area low. So making our way all the way down to that gap, followed by the VPOC there, which is 111. So Circle is uninvestable at this particular stage. Obviously, the price of earnings has gone through the roof here. But there you go. That is Circle. And obviously, Circle goes down. Coinbase is going down. SPY, we're buying underneath 5K, holding leaps, holding single SPY ETF. Still long. Still, we've not hit our target. Our target is 4/6s, followed by which point we're going to assess. We have extension. We have the actual target, which we want to share with the group members, followed by an extension target should we get there. Obviously, it's not 13,000 on the S&P. So we are getting very close here to our mathematical target. So what's interesting is, we could be in for some real fireworks here after Labor Day. We're still only 1st of July, and we're not messing around here. We're only 500 points away from the target, which we've mentioned over 7 years ago. Following that, we're very close to our mathematical target, where likely in the group we're going to be offloading SPY and then looking into these sort of end of the world puts as the SPY makes its way all the way down to 666. They are hiding the real crash, which is the dollar and the bond market, which obviously is going to go to zero, and we will soon see the evidence of that. The 10-year yield has been going sideways for a very long time, only expecting a huge breakout there. So that's the S&P. We're still long. Obviously, we dispose of leaps and leverage ETFs, but still doesn't change the fact. I'm sure eventually we're going to get a correction here, bit of a time decay killing option, but you cannot call for this yet. We're getting very close, don't get me wrong, okay? We are closer than we've ever been. Obviously, it's the highest the S&P has ever been in human history, but we've still not reached our target. Obviously, this is uninvestable asset. It's going to go to 100. There's absolutely no need, there's no justification to be holding this particular stock. Microsoft, we covered before. I believe the target was 550, I believe, and Nvidia is probably going to the Supercycle target around 180, maybe 200. Okay, we took part in this move here. Unbelievable call. That was the major call there. Now it's gone into a bit of a distribution. Now it's making its final sort of UTAD. No idea who's buying this at 180. One of the greatest stocks in the history of mankind. Nvidia probably up 60,000% since its genesis, if not more, if not closer to 100,000%. Absolutely incredible stock, Nvidia. I believe it was on 180 to 190. Obviously, it's very close to its target. It's not worth the risk for most investors. Now, let's take a quick look at Bitcoin. So Bitcoin obviously has been consolidating, frustrating, but June and July aren't particularly impressive months for Bitcoin. We know over summer there's a bit of a low Bitcoin monthly returns. If you were to have a look at the index, June and July, whilst they are positive, they're very, very low numbers, okay? Compared to September, October, November, and around Easter time, April, March, and then maybe April. These are very, very bullish months, even January. But over summer, right in the middle of summer, right in the middle of the year, we have the two worst back-to-back positive months in effect, okay? That's June and July. I believe the average currently for June and July since the genesis is around 8 to 9%, which is not really a lot for this kind of market, which has moved incredibly over the last 10-15 years. The greatest asset in human history is what you're looking at here. So doesn't make it bearish though. Doesn't make it bearish, okay? We're looking at 140 here for the YouTube audience. As we know, cause is proportional to effect, okay? So we're saying the effect is higher. If you work that backwards, there has to be a cause, and that's what we're building here. We're building a cause. In the last video, we spoke about the potential of this fractal. I mean, to me, the more you look at it, it does look like this, and there's always an element of a bit of a shakeout prior to the actual move, so we can just condense this down. I think at the best of times, you do have to be careful following fractals blindly, but let's be honest, it does kind of give you the same kind of inkling. So we spoke about this in the last video. Anyone who's long, maybe a good idea to hedge. Just watch out for some fake headline, World War X going on. All these BS headlines all here, all day, every day, designed to distract people from, like I said, the real crash. What is the real crash? People's ability to read a chart. Absolutely catastrophic collapse. We are all in puts all day, every day, and people's ability to actually decipher what's really going on. Following that, the collapse of the dollar. Obviously, we've been long pound and we've been long euro for a very long time. So any forex trades, they have to be long pound X and euro X. X is referring to any currency other than the pound and the euro. And obviously, we're pricing our courses here currently in dollars. Okay, that might change, soon. So if you're outside of the US, you're in Europe, you're in the UK. It's an unbelievable deal, I think, because we're pricing in dollars. So you're getting a very good exchange rate to your pound and to your euro. So, we've been bullish those. And then obviously the third crash is the bond market. So watch out for that. Now, it doesn't have to go to 95K followed by the actual move, but just watch out for that, okay? So that's all we're saying. We've had a very bullish quarter here because of the huge crash towards 5K, okay? Invariably, we are going to get some kind of BS correction. Doesn't change the fact, cause and effect, all we're doing is building it up. And should this happen, it wouldn't surprise me, to be honest. Everyone will say, right, that's it, it's all over, 66K, 70K, next thing you know, we get the actual move. Because none of that was really capitulatory volume, and usually bottoms on Bitcoin, or in any market, they usually, are analogous with a bit of a high volume climax, which we haven't really seen, and it makes perfect sense given we have much higher targets. So watch out for that. Anyone who's long, good idea to hedge, good idea to maybe short. Obviously, if it doesn't happen, that's fine. We're already long, but if it does happen, 95K, great time to add. The justification to add is that that's the end of the correction, rather than WXY XZ bomb. ready to go. This market still hasn't topped. You cannot call a major catastrophic collapse from here. Eventually, we're going to here. We're going to go 2K. That's a mathematical certainty. Just like the S&P. Everything's going to go 2K. Okay? Everything's going to go 2K. S&P 2K, Bitcoin 2K, everything 2K. Very, very simple. Just not yet. Bitcoin has to go higher to go lower. Your favorite postman Pat and the milkman, who we know were buying at 20K, right? They like to buy tops. I don't know why. They should stick to their day job, which they're very good at. Delivering mail, some nice pasteurized, non-homogenized milk, even raw milk, if you will, if that's legal. They should stick to that. However, they get excited by euphoria. There's absolutely no evidence that Postman Pat and the milkman are involved currently in this market. Yet. The key message, yet. So we have to go higher, get them trapped, right? And then they're basically buying the highest price Bitcoin has ever been and is going to be for a while. And then basically they're going to end up just buying the top. So someone has to buy the top. No one wants to buy the top, obviously, right? No one wants to not learn Elliott Wave, but this is the stock market and 99% of people have to lose, right? If all they did was learn this masterclass, they'd be in a much better place, but they don't. So anyway, we're just giving it away. And like I said, given how weak the dollar is, take advantage of whilst it's priced in dollars, because likely I'm going to start charging in euros and pounds here very, very soon. So take advantage of that whilst you can. So like I said, eventually the target's 2K, but not from here. We have to go higher to go lower. So I don't think there's anything more to add. Quickly covered everything. If you want to know more, all the exact charts, come and join the group. Inside candle, effectively another inside candle. 6 month looks very healthy there. 12 month, we're looking bullish. You know, that is not a bearish setup yet. We have to go higher, and like I said, watch out for that fractal. Okay, doesn't have to happen. Nothing has to happen, of course, but we have to be mindful, because let's be honest, it does look very similar to that fractal there, doesn't it? Right? And wouldn't that be the ultimate shakeout? Wouldn't that be? Yes. The answer to that is yes. That was a rhetorical question, not needing an answer there. That would be the ultimate shakeout. So something to watch out for, okay? June, July, dodgy months for Bitcoin, right? They are still unbelievably positive. I mean, pretty much every month on Bitcoin is positive, because it's gone up, 10 million, bajillion, trillion% since the genesis. It's the greatest asset in human history. But June and July are the least positive months in effect, so we have to be careful. Okay, nothing has to happen, but I would be very careful with that fractal. If it does happen, it wouldn't surprise me. So that's what I'm trying to say. It doesn't have to happen, but if it does happen, wouldn't surprise me. There is justification to add there, knowing, okay, 3 months of sideways BS or 2.5 months is finally over, and boom, we're ready to go much, much higher in Bitcoin. As for the altcoins, finally, we'll finish off on this. Well, we've spoken about this at length, ad nauseum here. Interestingly, bounced off 66.66 there. And, we're still not ready yet. To me, all of that is a flat. That is a 7 to 8 year flat correction. Ideally, we run this high, this high, this high. We run all of these highs, right? This run, this high, this run, this high. So ideally, we run this high here. So 70 to 73. The headline, unbelievably, is going to be all altcoins are dead. And then, we're looking at, Undertaker, chucking Mick Foley, what's his name, Mankind, 1995, King of the Ring, Hell in the Cell. Or was it 96? I think it was 95. That's what we're looking at. We're looking at a Jim Ross, he's broken in half altcoin season. That's what we're looking at here. We're looking at potentially, because, the charts never lie. Charts always tell you everything way before it actually happens. I'm looking at a catastrophic collapse from 70 to 73, potentially down to 25. So if that's not the biggest altcoin season of all time, I don't know what is. Obviously, we are preparing for that. So if you want to know more, come and join the group. We're looking at everything here. All the stocks, all the commodities. We looked at gold, silver, and platinum recently. So it's a very interesting time. I think it's an absolutely incredible time to be looking at these markets here. Over the next year, we're going to see some unbelievable fireworks, and there's plenty of opportunity there too. But the Bitcoin dominance still, there's no justification for more than, let's say, I don't know, 5% altcoin exposure. Some people may have 0% altcoin exposure. You know, Bitcoin is still, you know, Bitcoin and maybe stablecoin if you wanted to, but there's no real justification to hold aggressive altcoin positions yet. That will soon change. There's no way the altcoins are dead, as far as I'm concerned. But their BTC pairings are really struggling, right? Look at XLM, right? It's not the USD side of the equation. It's this. It's the BTC pairing. You know, XLM is actually coming up to a very good level here pretty soon in the next couple of months or so, maybe before Labor Day, right? So, you know, it's just to state the obvious, XLM BTC multiplied BTC USD equals XLM USD, right? So there's two parts to the equation. Bitcoin's effectively just, you know, prating about it's going to go higher, right? Obviously. So this is not the problem in the equation. Why is this going down? Due to this. It's this weakness in the BTC. Why is that going down? Because the altcoin dominance is going down. Or the Bitcoin dominance is going up. It's effectively the same thing. I mean, if you wanted to, you can just subtract it from here, right? It's the same chart, right? Would you be longing this chart? No. None of us would ever be going long this chart. It's a catastrophic waterfall collapse. It's a cascading collapse. Where's it going? To here. Where's the other level? This little hammer here. Once again, same sort of levels. It's just 100 minus what I've said. So we're saying 70 to 73 on the other side. So subtract both of those from 100. You're looking at 30 to 27. It's the same thing. This is going to happen. S-curve bomb. Altcoins are coming back, make no mistake, just not yet. We're very close though. Come back to me in about 3 weeks' time and we're basically ready. And obviously we are ready to buy all of these altcoins in very heavy size, okay? Still doesn't change the fact Bitcoin's bullish, right? We are dealing with speculative assets here with the altcoins. So there's probably no justification to go more than 10, 15, 20, 30%. But for right now, altcoins unfortunately are still not ready yet. Look at it however way you want it. Bitcoin dominance is going higher. Altcoin dominance is going lower. Just ask yourself, would you short that? I mean, would you long that right now? Not yet. It's not run anything, right? You know, things have to run levels. We speak about this is price action. They have to form shakeout patterns. They have to form candlestick patterns. They have to form Elliott wave patterns. It's not ready yet. You know, why would it bounce at 34.66? The next obvious level is this little hammer here. And it's the head of the hammer. Then it's the low right here. So anywhere here, that's a good time. And, you know, fine, we are closer than we've ever been. Nominally, it's only 4%. But it's not about nominal, is it? It's about the percentage move. Potentially another 21% decline in your favorite BTC pairing. Let's go back to XLM. That's probably what we're looking at here. I bet you it's another 20%, maybe even more, because obviously the altcoin dominance takes into account everything. Yeah. So if you were to just to use XLM BTC as a barometer for all the altcoins, obviously it's not. You're looking at some more weakness here, I would say. I would say there's some more weakness here. I mean, what's the level there? Probably that level there. There's another level here. So we're getting close. Just not yet. I'd be careful with altcoins. Anyway, if you want to know more, come and join the group.